back, everybody. By the way, quick check on the opening market, and we've got green going across the board, so that's good, but that just gives you a hint of what we're dealing with the volatility of all of this, and so, in other words, the message is still don't panic about this stuff.
Yeah,
Stubborn
Dow
inflation.
up over 1,000, the NASDAQ 500 and the S&P 142, 2%, 3%, 2%, so that's good news.
Yeah, it's been really interesting to see, all this volatility. There's been a couple really ugly down days due to tariff headlines, and people kind of scramble for the exits when it comes to the stock market, and it causes a lot of anxiety. These are good days, or these are great reminders of why we can't be scrambling for the exits like that in the stock market, because as quickly as it can fall, it can pop right back up again and again. So we may have 3 or 4 great days in a row. It might slide again tomorrow. No one knows, but this is why that short-term panic can really cause some problems.
So let's talk about Michael Masserant, by the way, joining us. Let's talk about big picture stuff, because only, I think, about 50% of Americans are invested and at least have 401ks, and then maybe beyond that invested in the market. But let's talk about some of the things that people are worried about right now. Inflation continues to be a problem and a concern that you're hearing about from people you deal with.
Yeah, so a lot of people at the class are saying, inflation was the big story in 2022, and it kind of subsided a little bit in 23, 24, but it's still sticking around. Inflation's still hovering around high 2s, low 3% inflation, and the Fed's target is 2%. So inflation's still sticky, and with the recent news of the tariffs, that inflation problem is not likely to go away anytime soon. Tariffs, if anything, will make that inflation problem a little worse, as these people who are importing goods from other countries are paying higher costs to import those goods, and they'll pass on those higher costs to the consumer. So the consumer is going to ultimately bear the brunt of those higher costs that will keep inflation sticking around even longer, maybe even rising a little bit in the near future here.
There is so much uncertainty with this market, with people's future retirements. As you guys are navigating through the class, fair to say that the majority of the people that are in your class are within a kind of a retirement age, 50s and up. Me at 45, I took the class, so there are people my age and even younger in this class, but what are their main concerns here if they're about to retire and their 401ks, maybe not today, but in the last couple of days have just plummeted? Yeah,
so people come into the class, especially when things get choppier, and the first question they all want to ask is, what should we do now that the market is down? And really, the answer that no one likes to hear is that it depends. Everyone is different. It depends on, are you 3 years away, 1 year away, 10 years away from retirement? Are you retired already? Do you have that safety bucket of money that's protecting you already? There are so many questions that will depend on what's your current situation. But the first step for everybody is that education to understand, okay, what's happened has happened. I can't change the past now, but from today going forward, what steps should I be taking to make sure I protect myself financially going forward?
So we've got inflation, we've got the tariff issue, which is causing a lack of consumer confidence, another issue.
Well, the consumer confidence is a little alarming, because really this can be a self-feeding loop where consumers realize, okay, tariffs are causing higher prices. I don't love that. I'm going to slow down my spending. So now companies are receiving less profits, and companies say, okay, well, we're not going to hire as much, or we may even lay some people off to cut costs on the company side. So people lose jobs. People who lose their jobs spend even less, and it's a self-fulfilling prophecy. And those kinds of things can cause a recession. And that's one thing the Trump administration has not ruled out. They've admitted this may cause recessionary environments they call it the short term. The short term could be 6 months, could be 2 years. No one really knows. Depends on how long these things take to work themselves out.
So if you're somebody who is retired already, we just had one of our friends, Bob, retired last week, somebody who's just retired. How do you navigate this?
Yeah, so you were talking earlier this morning about anxiety with money, and it's really important, we believe, to just be laser focused, especially in times like this, on the things that you can control. It's great to be informed, but no one can control what happens with the stock market or tariffs. But what you can control is everything that you're managing with your own money, and having a good sense of, okay, how much am I currently spending? Do I have an emergency fund that I can fall back on? If I have a credit card debt, can I knock that stuff out. What can I do with my money right now to put myself in the best position so that I can achieve my goals, whether it's short-term goals, medium-term goals, or long-term goals?
How do you cut out all the noise? And by that I mean, I will watch somebody, some great economic mind support the tariff. I will watch some great economic mind say what a terrible idea this is, and I'll agree with both of them. You know, so like, how do you navigate that as just a regular old, like, I am so, I guess, overmatched by this entire conversation.
It really is difficult, and that's, you know, economics I find frustrating and fascinating for that exact reason. You can get 10 brilliant economists in the room, and they might have 10 different opinions, and they all sound really smart, and any one of them could be right. That's what's so challenging. And so what we're trying to teach at the class is there's an ocean of information out there, and if you're interested in this stuff, go ahead and learn, read about it, but focus the most on what impacts you. Does this
keep it to the basics, right?
Exactly.
I mean, you have your emergency fund, you have your retirement fund, and go from there, right?
And really, these day-to-day swings, no one should be trying to play this guessing game, because no one can predict this stuff. No one can guess what the tariffs might do next week or today or tomorrow, what stocks might benefit or suffer. Don't play that guessing game. The long-term money, throw it in the index, call it a day.
Got it. We're going to take a quick break. We ran out of time. Michael, thank you so much. We will see you next hour.
Yep, absolutely.
And we're going to do a little game show action. You're going to be a game show
host? Are you the game show host?
Little financial literacy month.
Oh, I love it.
Oh, boy.
We're in.
We're ready.
refedu.org for the Retirement Education Foundation.
We'll be right back.